But if you have questions, I'm going to have time at the end if you have any questions or comments about the content that I'm sharing today. And if you have further questions, our booth for the Better Traders is literally just down there, just down the block, okay? So my name is Aaron Dishner, but most people know me as Moon and Papa. So I have a YouTube channel where I talk about bot trading, trading cryptocurrency, strategies, trading psychology, risk management, things like that. So I started in 2018, and things have just been going crazy ever since, and I'm so happy and fortunate to be here. Before I get started, I do need to say that today's slideshow is, or rather today's presentation is sponsored by 3 Commas and OKX, and OKX is right over there. Please do stop by their booth, they're fantastic. And 3 Commas is not represented here, but our course is at thebettertraders.com. I know 3 Commas almost better than I know my kids, so I'm kind of representing them at today's conference. So before we get started, just have a quick disclaimer. So I am not, and our team, we are not financial advisors, accountants, or accredited traders. We are private, expert traders who have learned how to profit in our own accounts and now teach thousands of students around the globe using our techniques. So please conduct your own independent evaluation and consult your accountant or financial advisor for any financial or trading advice. Investing or trading virtual assets comes with risk. Past performance is not representative of future results, and profit is never guaranteed. The value of virtual assets are variable in nature, cannot be guaranteed, and can be, pretty much are, highly volatile. And this presentation includes paid sponsorship content from 3 Commas and OKX, trading platforms for virtual assets. So, now that the fun stuff is done, let's talk about what we're going to be discussing today. So really today's workshop is all about 5 main points. Understanding the advantages of bots versus humans, compounding profits through automated trading, growing a long-term crypto portfolio with accumulation bots, maximizing risk reward on engaged capital, and exploring optimal bot strategies for high and low market volatility. So I'm not going to be pounding on each of these points, but everything I'm talking today is tied to these 5. So why bot trading? Really, for me, it comes down to 4 points. It comes down to saving me time. It comes down to making it easy for others, basically one-click presets to set things up. It comes down to automatically accumulating tokens that you see long-term value in. Bitcoin, of course, but maybe Ethereum, or maybe OKX's token, OKB, or XRP. Anything you want, you can accumulate it long-term. And the best part is that bot trading and automated trading, for the most part, is relatively emotionless. The reason why I started bot trading is that I was busy. I'm actually still teaching. I teach at a K-12 school. I teach music, not finance, not any of this stuff. But while I'm teaching, I don't have time to look at the markets. While I'm at home with my family, I don't have time. While I'm sleeping, I'm not waking up to check the markets anymore. I don't do that. It's foolish. So I let the bots handle it for me, and it's a huge benefit to me. So let's talk about each of these 4 just a little bit, and then we'll get into the real fun stuff. So time savings. So basically, bots are your 24/7, 365 trading team. You don't trade alone when you have bots. When I first started trading in 2015 on the stock market, I had to make all of my own independent decisions. I had to look at the charts, I had to read news, I had to follow lots of things, and make those decisions based off of that. Whereas bots, they're not going to be affected so much by their limited time. Bots are just going to run. They're running off servers all the time, and it's incredibly valuable to save time. And this point right here, we'll talk about this. There are moments where you do have to intervene. There are moments where you do have to look at your screen and change some things. That's normal. It's not completely set and forget. So this is not a crock pot, which is a famous cooking device from America. I say it all the time, I'm sorry. But it's not just that easy. There are moments where you do have to spend some time, but it's minimal. Bots are also fantastic for accumulating tokens that you like. There are many familiar staking protocols and also lending platforms like BlockFi, or Ledin, where you can deposit your crypto and earn revenue on that. You can earn, you can earn interest on that as yield, even in DeFi. But bots are different because those yield and DeFi protocols, you're at risk. You're at risk if you get rugged. You're at risk if all of a sudden, like we saw back in June, if a company becomes insolvent, they're not your tokens anymore. You don't have access to it. You're locked out. So the reason why I like these bots is that I can decide with my present portfolio, I can say, actually, I want to split this up to things that I really want to know, and I really want to, not know, but to have for long term. So I can decide whatever portfolio I want, and I can automatically just split it out, and it will automatically adjust that portfolio. Another thing that's really great is just having one-click presets. Now, I know I wear glasses, and I'm making YouTube videos, so I look a little bit nerdy and techie, only a little bit. So this stuff is really meant for anybody to do. Now, I say that, but it does take some time to get used to. But the platform that I'm talking about, 3Commas, they do make it fairly easy for you to get started. Now, getting started is easy. Keeping it up is the hard part. It's really easy to press a button to say, okay, make money. But it's hard to remember, oh, today I have to spend time. Oh, I need to look up on it. Like, it does take some time. And it does take a little bit. I'll talk about how much time later. And then an obvious thing about this is that bots don't have emotions. They are not biased. They're not influenced by the news. They don't care about the SEC in the United States. They don't care about the worldwide financial crisis that we are in, or if you believe we're going into. They don't care. And if anything, they love volatility. The more volatility, the better for these bots. As a human trading, when I see a volatile chart, if I don't know how to trade, that's scary. But bots aren't scared. They're not influenced by any of those emotions. They're just programmed to do one simple task over and over. So let's go ahead and get to the really fun stuff, to talk about some strategies, okay? So, DCA bots. This is my bread and butter. DCA stands for dollar cost averaging, which in essence is when you buy something at a price, and if the price falls a bit, you buy a bit more. Price falls a little bit more, you buy a bit more, and every time you buy like that, the entry price is averaged down, and so is the take profit. So as you have your buy price and your sell price, everything gets averaged down. So I'm going to show you screenshots that what will happen is that you will actually sell in profit way below your entry price. So DCA works extremely well in crypto because it's volatile and because crypto is incredibly forgiving. I'll show you those on the charts. So let's go ahead and take a look at this. So DCA bots, simply put, look just like this. No, they don't look like this. Excuse me. They operate like this. They are optimized for trending markets and not just up only. I don't use DCA bots just for the bull markets. I use DCA bots for the bear markets because I can use them to short the market, whether it's with futures or even on the spot market without futures. I can actually hedge my portfolio with bots, and I'll talk about that. And this is something I talk about a lot. Bots are designed and pre-programmed to absorb negative price action. So just like this diagram shows, when the price falls, not only will it make me more profit on the upside when it returns, but the lower it goes, the more I can add, the bigger the return. So for some of you that are traditional traders, you're probably thinking in your mind, this guy's a lunatic. Crypto goes down only, it's not up only. But you'd be surprised at how many of the charts that I specifically choose, and I'll talk about that too, that do return. I'm not doing this on every chart. It doesn't work for every chart. You want to look for certain things. So I'd love to show you this in action, like in the past tense, but this is what happened. So here on 3Commas, I had a bot running. So the initial order to buy is called the base order. So here you can see this B and this dot right here. So it bought at, we'll say 87.80. So once that happens, that initial order starts and it's triggered by something, whether it's a TradingView alert, RSI, MACD, whatever you want. So as soon as this starts, all of these additional trades are automatically layered below. So here is my base order, and here is safety order 1. These terms are unique to their platform, but essentially this is my entry trade, and this is just another trade at a lower price. So it's at 86.50. And this one actually hits a lower price right here. So you can see here's my initial entry, here's safety 1, and safety order 2 is much lower. Now keep in mind, I didn't choose where to buy. This is all pre-programmed by the bots, okay? So I wasn't there at, what is this, 1:20 or 1 a.m. or so? I don't do that. No. The bots do it. So my last safety order is here, and you can see this yellow line, this box, is average buy price. So essentially, what happened is that my buy price up here, and having safety 1, safety 2, now it's averaged everything down significantly so that my take profit is well below where I initially started at about 87.80 or so. And the amazing thing about this is that when we talk about risk to reward ratio, when we use bots, we don't risk everything on the first trade. It only uses a small percentage of your allotted funds. So the way that I do things, I work off of sevens. So to put it plainly, we would have base order would be 1 as far as volume goes. And then when we have our our safety trade right here, that's gonna add twice as much. So now we have a total volume of 3, and then we add twice as much as 2, which is total volume of, I can do it, 7. So the beautiful thing is that, yes, you can close out with your first trade, but you're not gonna make as much as you do when the price falls, and when it comes back up, you get a bigger payday at a lower price. It's a weird concept to get used to, and it's amazing that this stuff is working, to be honest. Just because I've been doing it for so long, and I always think, this one's just gonna keep falling. This one is gonna be the one that I'll tell people on YouTube, here's my big loser. But when you follow DCA and you understand it and you trust it, it works. It's not magic, but it just works, it's math. So I'd love to talk to you about what started this signal. So at the Better Traders, we have free bot signals called the TBT signals for short, or the Better Traders signals. So you can sign up to 3 commas and you can subscribe to these signals. We have, I need to find the number, but I think it's 13,000 subscribers. These signals are very slow, they're very safe, and they're very conservative. I specifically designed these signals to be all 3 of these things so that they're entry-level signals. The frustration that I had as a bot trader at first was that everything was happening too fast. I was under the thinking that more is better, when in reality, less is always more. It makes more sense for your bots when you're learning to generate just a couple of trades a day. That way you're not feeling anxious. You don't have to check. And often when people copy the signals, they'll send us or our coaches a message saying, I turned on the bot, nothing's happening. And we always reply, I know, you just have to wait, be patient. So it's not an ATM machine. When you press enable, money will not come out of your computer. But if you're patient and you trust it, looking at the strategy and how it's worked, and this is hands-free, me not doing a single thing to these bots, because I love data and I collect data. So since November, about 2 years ago, 2020, it's made about 69% in Bitcoin and about 92% in USDT. Now, we all know that Bitcoin from November 2020 to now has shot all the way up from about 19, or where we are now, to 69K and back down again. So I understand that, yes, you could have 3x'd your portfolio just buying and holding Bitcoin and selling it at the exact top, but the bots aren't doing that for you. The bots are just gonna be slowly generating profits at regular intervals. So I wanna look a little bit more at some data. So we have a lot of stuff actually on our site, but I think it's important that people know, I don't like black box. I don't like to keep things and just say, use these signals, they're great. Like, I want to show people and talk about data analysis, because that's important to me. So this is showing all of the used safety orders. Again, going back on our slides, we were just talking about our safety orders. So our base, safety 1, safety 2. So looking at all of those closed trades for all of these trading pairs, and I'm sorry it's quite small, but there's a lot of data here. And based off of that, I know how many of these trades close with the base order with safety 1 and with safety 2. So let's zoom in a little bit more to this. So we can see here, and this is why I love this data, is because out of all of these trading pairs, the average is about 59% close their trades with that first base order. And again, I want to help. So that first base order is this. So about 60% of the time, your bots will close here. So the price is, the signal is received, price moves up, it's done, more than half the time. But what we want to do is we want to find out if we can beat this. We want to identify trading pairs that beat the average performance. So we want to look for things that are actually less, if you can believe it or not. And the reason why less is more is because we want to find things on this first, on this first column, I want to find out which trading pairs close less here. Why? Going back to the chart, thinking about our math, if we're talking about sevens, that first base order only has 1/7 of our total volume. So if we know 1/7 of our total volume only, or closes about 60% of the time, it's profit, but it's not as much profit as closing with 3/7 or 7/7, the entire max volume for that trade. So again, looking at this, we want to find if there are any trading pairs here that are just below this average. And on the flip side, we want to find trading pairs that beat it. We want to find a trading pair like XLM here and EOS that just slightly beat that average, and especially over here. So anything that's beating these averages on safety 1 and safety 2, they're fantastic, because again, this is telling us that the odds are that these will close more often with safety 1 and safety 2, meaning more profit. More volatility, but more profit. So let's talk a little bit. I'm not going to go deep into the platform because, to be honest, it's a little bit confusing, and I'd really just like to talk about bot trading and the reasons behind it, like I talked about at the beginning. So when I said before about less is more, we're thinking about all these things, thinking about portfolio distribution. How do we use our funds and break it apart so that we're using the most and the most efficiently? So you can use and input as many what they call max active deals as you want. You could actually create a bot to have every single trading pair that's available on OKX. But just because you can have as many trading pairs as you want, and there are about 300 plus trading pairs, maybe more, doesn't mean it's going to be a really profitable bot. Less is more. And when we think about this, let's just use this example about portfolio and, let's use account distribution. So if we're looking at a portfolio size of about 2,600 USDT, I want to make sure that I'm using the most out of my funds. I don't want to spread it thin. So what happens is that if you decide to use more max active deals, as they call it here, more available deals that the bot will trigger trades, that means that you're going to need to do some math to figure out your base order size. How much volume will you use on that first trade? So you can see here that with these numbers, I'm looking at using about 69 or 70% of my available funds to run this bot. But the thing about more trading pairs is that when you have wider fund distribution, it means that you have smaller profit potential. So if we look back at the data, thinking about 60% of the time, our first trade closes, right? More than half. That means, based on that number, that means 1% target per profit would equal about 26 cents or 26 USDT per trade. That's the base order profit. So the reason why less is more is because if we reduce our max active deals, if we reduce the number of trading pairs in our bot, but we increase the funds that we're putting into those 5 pairs, we actually end up with 2 times more profit. And looking at the data, we can also analyze to figure out which pairs have a better history, which ones close faster, and which ones use up more volume. So it's not just reducing it down to 5 pairs, it's 5 pairs that close faster, it's 5 pairs that are more profitable, and it's 5 pairs that have a great track record. Does this all make sense? I'm trying to speak slowly, and this is all a little bit crazy too. So again, if you have questions and you're just joining us, feel free to ask them at the end of the presentation. Check my notes. Fantastic. Okay, so let's talk about my workflow. When I look at making a bot, I have a couple of things that I do, and I want to share my personal workflow for when I'm doing this. So there's about 5 steps. The first one is I want to identify good trading pairs. Bitcoin, USDT, great trading pair. I think we could all say that we all like Bitcoin to some degree, so we'd all want to have more of it. But just because we like it doesn't mean it's a great trading pair for bot trading. And again, the whole purpose of bot trading is to make these micro transactions, almost like high frequency trading, to accumulate more of something. Bitcoin, OKB, Ethereum, Tron, XRP, whatever. But it does matter. And like I said before, if we're thinking about trading pairs and we're looking at like OKX, they have 353 coins and 626 trading pairs. So how in the world do you choose which trading pair is going to be good? 626 pairs is too much. Just a quick side note, I actually live in Tokyo and I'm American. So I've been living in Tokyo for the last 13 years. Whenever I go back to the United States and I look at the cereal aisle, it's overwhelming. There are too many brands of cereal. I can't decide. I just want something that's crunchy and yummy, right? But I don't need to see 16 types of granola. It's too many options. So again, less is more. Sorry, just a quick side note, but yeah. So I want to show you a couple of charts that when I see these, I go, this is what I want to use. This makes a great chart, or I've used them before. So the first kind of chart that I really like to use for bots are charts that just have a general slow uptrend. Anything that has a quick parabola, I stay away from. Because as the saying goes, what goes up is going to come down. And if it goes up way too fast, it's going to go down way too fast. There's also a saying that escalator up, elevator down. So be really careful. But charts like this, and again, notice this is the daily time frame here. XMR, since the beginning of the year, has had downs, big falls, and also returned up. These are the kinds of charts that I look for. Because if you can see, and if I applied a moving average, you could see that there's this general support line and it's moving up, even if it's slow, but it's generally moving up. And again, it's not really raging up, it's more just about this slow general uptrend. And if I zoom in to like the 4-hour time frame, there are probably going to be a lot of little pops and drops on that way up. Again, fantastic for a long bot. We could actually flip this and invert it and take this chart upside down, and it would be great for a short bot. So again, the whole idea is that we want to look at something that's slow, gradually trending, either up or down. Another thing that I look for are charts that have what I call an oscillating pattern. So I like music, I like producing music in synthesis. And in synthesis, there are lots of different waves. There's a triangle wave, saw wave, and then there's a sine wave. A sine wave is the smooth type of wave that just keeps going up and down, and that's the oscillation I'm talking about. So charts that oscillate, and you can see this one, where it goes up and down, and it returns up and down, up, and it just keeps making this nice little back and forth, almost like a W that just keeps changing a little bit. Those charts are amazing because there will be periods where here, this is the daily time frame, mind you. So if your bot started a deal right here, you might have to wait 1, 2, 3, 4, 5, about a month until it closes in profit. Patience is huge in bot trading. I've had to wait up to 3 months for a bot trade to deal. I'd love to answer a question about that later, but I don't have that in my notes. Maybe I should add for the next presentation tomorrow. But again, oscillating patterns that are regular, that are very cyclical, that you can basically not bet on them returning, but they have a good pattern. And finally, charts that have a consistent history. So this is a chart for Atom BTC on the daily time frame, going all the way back to January 2021. The reason why I have this chart here is because I want to show you that it takes time, but a chart like this consistently comes back up. So we have this chart falling down here and it comes back up. So even if your bot started a deal here, it would be late September or so, it would actually close out by the time January hits. Again, that's a long time. October, November, December, so about 3 months. But it does. And you know what? with proper DCA, and I'm going to talk about this escape hatch strategy, you can actually close out a whole lot sooner. There would actually be 1, 2, 3 opportunities to close out at a lower price and in more profit. We'll get there. So the next thing I think about once I've identified a great chart is the strategy. What kind of strategy fits that chart? Is the chart slowly trending up? Great, it's a good chart for a long bot. Is the chart slowly going down? Great, it's a chart for a short bot. Thank God there's just 2 directions a chart can go. I do not want to see a Z-axis on charts. That would make things really difficult for charting. So we only have price go up, price go down, and time. So it makes it easy. But I also have to take into account, what do I want to take profit in? I could choose Bitcoin or USDT. What do I want the bot to do? Do I want to wait longer for a larger profit, a swing trade? Or do I want it to close quicker, like a scalp? So when I talk about profit currency, and you might be wondering, okay, what is this? Why does it matter? I want to talk about XRP. And this is really small, I'm sorry, but this is the chart for XRP against Tether on OKX. This is the weekly time frame. So back here it says 2020. So this is after what I call the Corona crash in March 2020. Then after that, we saw XRP against USDT increase 1,000% in about 13 months. Massive. And then, on the flip side, from about May 2021 until here, this trial in about June or so at the bottom, it dropped 80% in 13 months. So the reason why I'm showing you this is because you might be wondering, well, don't you just want to take profit in XRP as it goes up and just hold XRP and then sell at the top? But I mean, let's be honest, how many of you sold at the very tip top? Even me, I struggled with that too. I didn't sell at the very tip top, but I did sell eventually. A little bit late, but eventually. So when we talk about taking profit, which currency? There are 2 different words for that. So there's the quote currency and the base currency. So in this case, XRP is the base currency, and USDT is the quote currency. So when you're spot trading on whatever exchange, you're using your USDT to buy XRP. You're using USDT to buy Ethereum, to buy Bitcoin. So you're using that quote currency. But you can choose in 3 commas, do you want to take profit in USDT, or do you want to take profit in XRP in this case? So with that in mind, I believe that, well, I'm getting ahead of myself. I can't say it because I have to explain. But I want to show you here on the platform that you can change your strategy not only from long to short, but you can choose quote or base for your profit currency as well. So let me go back to the chart. Sorry, I got ahead of myself. So in this period, whenever you see a chart starting to move up, I believe that it's much smarter to accumulate the token that's mooning. So in this case, it makes way more sense to have your bot accumulate more XRP. If I accumulate USDT, USDT isn't increasing in value. USDT did not increase 1,000% in 13 months. XRP did. Therefore, it makes more sense to accumulate more XRP tokens than to offload them. Or, if you're part of the XRP army, and I'm not paid by Ripple Labs or anything, like I have no affiliation, it's just a chart. But let's say that you love XRP. What you can do with a short bot is, what I believe is that when the chart falls, it does not make sense to accumulate more XRP if the chart's falling, because your portfolio is going to sag 80%. So you can actually use short bots, what I call hedging your portfolio. By selling XRP the same amount, you can rebuy the same amount. And the profit, the difference, is going to be in USDT. So you'll still have the same amount of XRP that you had up here, except now you have essentially 80% more USDT, because you haven't experienced that drawdown in holding XRP over that 13-month period. Does that make sense a little bit? I know it's a little bit weird to think about it with this, but essentially you want to accumulate and sell and hopefully offload up here at the top. And when the chart changes direction, you want to hedge your portfolio if you're a long-time believer, like for Bitcoin, like for Ethereum, like for XRP. Okay, let me see. So in this example, in my opinion, hedging beats HODL every time. HODL works long term. If you have a 5-year plan for Bitcoin, you have a cold storage wallet, and you just turn off Reuters and everything, you don't look at Bitcoin.com, you don't look at the news, don't go on Twitter, you're fine. But for most normal people in the world, you do pay attention to the news. So hodling can be very stressful, and there's no guarantee, even of Bitcoin going up to make a new all-time high. We really don't know. So in that way, it makes more sense to hedge your portfolio, to preserve risk, and to plan that if we see a rebound, then great, we're prepared. We can use that accumulated USDT, that 80% more, to just buy more XRP or Dogecoin or Burger token or whatever crazy token comes out. So the next thing I look at is what the deal start condition is. So a deal start condition essentially is a trigger. So this trigger is generated by RSI, by MACD, by moving averages, by a TradingView signal like the TradingView strong buy, sell, strong sell, those signals. But you could also use free signals like the TBT signals that I shared before that are free on 3Commas. And you can even use TradingView alerts to start your bots, to stop your bots, to generate new trades. You have a lot of flexibility. Let me see, where am I in my presentation? Okay, so I want to talk to you a little bit just to show you a preview of this. So 3Commas has this really cool method of all of these commands right here. So all these commands are spitting out JSON, J-S-O-N commands, which is a programming language, if I'm not mistaken. Again, I look nerdy, but I don't really know what JSON stands for, other than it does something to 3Commas bots, right? So what it does is you can choose, essentially right here, message for deal start signal. So I'm going to copy this, and I'm going to create an alert over here in TradingView, so that when the price of XRP crosses down this line right here, then it's going to send a message to my bot on 3Commas to start a deal. That's essentially what it is. It's pretty amazing. So it doesn't even have to be price-based. So it could be a trend trading indicator, like I use something called the TBO. It's my favorite indicator. So you can get in the start of a trend. So I actually use this a lot. And the benefit of using it this way is that you can have open targets. It's not a fixed 1%. You could have a bot start here and move up 30%, and then when it receives a signal to close on TradingView, it closes at 30%. Now, that's an exaggeration because it doesn't happen all the time. That's a massive move, but you get the potential of what's possible when you use these signals. Okay, so now I have to think about portfolio allocation. How much of my funds do I want to put into this bot? So there are two things that I consider every single time. One is the 30% rule. I never ever use 100% of my funds for any single bot. It exposes me, it's very risky, and I have no way to dig out my lost deals, those trades that just keep falling and falling and falling, like a Luna catastrophe. So the 30% rule, if you think back to the slide where I was talking about, let me see. This one. So you can see here, even here I actually put it. This is actually using 69, well basically 70% of my funds. I want to keep 30% out, just in case the price continues to fall. And I actually have a closed trade to show you that happening. So this is for a different trading pair, but you can see right here, base order 1, it's safety 1, it's safety 2. So note that this is really high. Looking over here on the side, this is just below 37.50. And you can see here, this is me manually placing my extra trade to buy more. Now, this is a pretty embarrassing screenshot to share because this is pretty much at the top of this bounce. But you know what? It doesn't matter because look what happened. The price came up, it closed in profit here, and the price actually fell down a little bit afterward. So I still got to close in profit. And if we think about that distribution of funds, where our base order is 1, safety 1 is adding, so it's multiplying by 2, and then we have our full order of 7. This one right here, I used a whole lot more. I doubled down again. So yes, DCA, the type of DCA I use is the martingale strategy, made famous by a poker player with the last name Martingale, where you do double down. Not double down automatically. I looked at the chart, and for whatever reason, at this little top of the bounce, I decided this is a great place. But you can see here, it works. Because if I had left this, I'd be waiting to take profit probably about here, between 36.50 and 37. Not a good spot, because I'd have to wait a whole lot longer. So again, applying more at a lower price helps me to exit quicker. So that's why 30% is important. Another thing that's really awesome about bots is that you can enable sub-accounts. So sub-accounts are essentially these separated, distributed accounts. OKX has a really, really easy setup process for this. Let me play this video and I'll talk about it. So you can create a sub-account, I believe as many, well, probably not as many as you want, because let's be honest, they probably cap it at like 20. But essentially, you create this API key for your sub-account. You connect it to 3 commas. Well, let me do this. So I named it here, and now I'm going to, right there, manage the API. So once I've done that, I have to do a couple of things particular for OKX, but OKX, Binance, Coinbase, Bybit, FTX, they all have different APIs, but very similar process, where they have an API name, they have permissions like read and trade, and then once that's done and you enter in your 2FA details, you'll be given your API key, and you'll be given an API secret. So the beautiful thing about this is that I can distribute my funds in multiple sub-accounts on OKX. I could have up to 20, I believe. So instead of me risking my whole account, what I can do with that is I can use the bots, and I can put about $100 or whatever amount I want into about 20 of these. And then the bots have this setting where it automatically invests the profits back in. So I don't have to do too much with that. These bots are automatically going to accumulate, and they're going to automatically compound the profits back into the base order size, back into all the safety orders. So eventually, that's slowly going to grow. It's a very effective way, and it's really fun to see that. So the last thing is the easiest part. You just start the bot and wait. Patience is huge with bot trading. A lot of people think that it's all about, again, press a button and then money flies out of your USB-C drives or whatever, or like you automatically get an email with Bitcoin. No. But really, it's all about these slow, steady, small wins. That's really the goal. So thinking back to hodling, and just to, oh, that was weird. Okay, I'll fix that for the next time, that's fine. So thinking about hodling, this is pretty normal for your portfolio. And again, these are just numbers. This isn't based off of anything, but this is just a reflection of even my account, what I've seen happen. When I hodl even Bitcoin, there are months where it shoots up 30%. And then there are months where it retraces and it actually goes lower. We've seen that happen since June, right? But the beautiful thing is that while you're hodling and things are kind of going, up and down, oscillating a bit too much, DCA bots are going to be extremely slow, and there might even be months where you won't see any profits. I'm not saying that every day you're seeing profits. I know our team has these shirts that say our bots are making profits while you read this. It's kind of a joke, but in a sense, it's true too. But I'm serious, there are days, there are sometimes even several days or a week where nothing happens. And it's typically after the market drops and I place my orders and I sit on my hands and do nothing. I just wait. So a lot of this has to do with following strategy and trusting a strategy enough to see it through. And a lot of the people that take our courses, the first time the market drops, not if, but when the market drops, the first time is always scary. So you're like, okay, this guy with a really weird name is telling me what to do. I guess I'll try it out and see. But I love hearing the testimonials saying, I was there. I was there in May and June 2021 when we had our mid-cycle bear market, and I did what you said, and it actually worked. It's awesome. It's a great testament. It's really encouraging to hear that. So again, the difference between static and compound is visually quite simple to see. It's not staggering. Compounding, we've all seen those compounding calculators. Yes, if you made 1% a day, you'd be a gajillionaire by the end of the year. But the reality is that you're not going to make 1% a day. The goal for me as a bot trader, if I can make about 0.4% on my bots per day, I'm very happy. Doesn't sound like much at all. Some of you might get up and leave because you're like, you didn't say 1,000%? Yeah, exactly. You want to have something slow and small and steady because it's a snowball. And I know here in Dubai we have so much snow. But essentially, if you go to the mall and you look at the ski rink or whatever that's there, when you look at a snowball happening, when you see that falling, you see it start and it's just so small, and eventually it starts to accumulate more and more and the mass increases. That's the same thing that happens. It's a slow process. It's a very slow process, but it's incredibly rewarding to see that happen. Where am I? Oh, great. Okay, so I want to talk to you about some other strategies. So we're going to be talking about grid bots. Have any of you ever heard of or used a grid bot before? Great. So a grid bot essentially is horizontal price-based action. If you've ever used graph paper that have vertical and horizontal lines, just take out the vertical lines and it's all horizontal. That's exactly what a grid bot is. So we have this horizontal price grid with predetermined buy and sell orders there. So when the price falls and hits a grid line, it buys, and it buys more. When it comes up, it sells, and it goes up again, it sells more, and it buys, etc., etc. And this is a screenshot of a grid bot that I've been running. This is a faster time frame. This is the 5-minute time frame. But you can see when there is a very volatile chart like this, it makes to be a very profitable grid bot. In the same way, when we're looking at DCA bots, we want to identify charts that are trending up or down. Grid bots, we don't. We want charts that are just boring. Like Bitcoin, since about June 15th this year, up till now, boring, doing nothing. But you know what? Grid bots are just eating that up. Because while everyone is waiting for a breakout, the grid bots are just buying and selling, buying and selling, buying and selling in this small, tight grid. It can be very, very profitable. So this is a screenshot, and it's not a lot of data. It's just after running for one day. But I started this last week for the Vulcan Forged Pyre, I think is what it is. But I specifically picked this trading pair because it's just going up and down, and it's just staying in a really tight range, a consolidation or accumulation range. But making about 1.82% in about 24 hours is a pretty decent win for this. Again, me not watching a chart, I'm not going and hitting buy, sell, buy, sell, buy. The bots are doing it. Okay, so I want to talk about some tools that we offer through the Better Traders. So I don't just teach you how to use DCA bots and grid bots. I want to give you more tools. I want to help you understand how to interpret the market, but also interpret your emotions. Trading psychology is a big part of what I teach and what I believe in as well. Okay? So let's talk about volume. So many people just open up the TradingView charts and they delete volume. Then they add MACD and they add their Ichimoku cloud and they add all this stuff and you just like whatever volume. But honestly, volume is surprisingly one of the best indicators out there because it's showing you demand or lack thereof. But the frustrating thing I've always found about TradingView's volume is that it always shows you how much Bitcoin was traded per day or how much Ethereum, whatever. But I want to know as a trader, how much is that in USDT? And I hate converting it. Okay, Bitcoin's at 19,800. Okay, no, it's changed now, and this is how many, like it doesn't make sense to me. So volume is really important, and I wanted to have something that does that for me. So we made something, it's a really simple indicator. It's completely free. You can go on TradingView and look up the TBT base to quote converter. I have videos on YouTube about it. All it does is it just does a quick calculation to convert the volume in the base currency, Bitcoin, to the quote currency, USDT. So now I can see how much the 30-day moving average is of Bitcoin USDT on OKX, which is about, oh, that's a lot of numbers. And I wish they had a way to put in the commas or something, but it's about 207 million on the 30-day moving average for OKX's BTC USDT chart. And of course, I can get individual days. This is incredibly useful for bot traders. I don't want to become a wall in the order book. I want to make sure that my bots are liquid. I want to make sure that when they're adding more volume, that they're not going to be trapped and other people are going to put their orders in front of mine. So volume is super important. I want to stay under 1% of the 30-day moving average of the volume. This is really helpful as well on alternative markets. So like if I were to trade OKB against Ethereum, that's a strange ticker. It's an alternative market. So I need to know how much Ethereum I need in order to run a bot on this chart. And that's why the converter is useful. I can see that the 30-day moving average is about 360 Ethereum, for this trading pair. So again, I want to stay with like 1% of that. I don't want to max that. I don't want to become a wall in the order book. So volume is important. We also have tools that help you to backtest DCA bots. This is something that we've recently developed and added to our offerings, which is great. So now we basically, on TradingView, you can emulate all the settings of your bot and backtest to see what works best, what deal start condition works best. Do more safety trades work, or does it reduce profitability? Is it better to have X, Y, and Z? Like, you have so many options. So this is a screenshot of our back tester. And if you've ever used a strategy tester on 3commas, or I'm sorry, excuse me, on TradingView, you'll know this screen, but let me just explain it. So here in this XY grid, we have, this is the profit over time. The negative numbers here are the drawdown. So over a period of 98 trades for Cody USDT on the 10-minute chart, it's netted about 48 or almost 49%, while buy and hold is less than half of that. So buy and hold will only be like 23%. So I can see, based on the past performance of this, I have an idea of what could be happening in the future for this trading pair. So I always want to beat buy and hold where at all possible. And that's what the backtester is going to help me visualize, to help me tweak the settings. And lastly, we have something called the TBO switch. So the TBO is my favorite indicator. It's a trend-based indicator. And essentially what this thing does is it waits for a signal, and then it's going to automatically flip from long to short, long to short. When the range is really tight like it is right now, there's of course going to be a lot of chop and drawdown, which is frustrating. But as soon as the chart starts to trend, either to the upside or to the downside, this bot is going to ride that trend as long as possible, and it can make some very, very nice profits long term. Thinking about hodling, this is the chart for Bitcoin. So this is a 1-year time frame, July 1st, 2021 to July 1st, 2022. Bitcoin shot up 105%, but it also fell down, well, from the, not from the top, but from here where we start. It has a drawdown of 42%. So again, hodling for the long term works, but for the short to mid-term, it doesn't. So the TBO switch is going to ride that volatility, and it can actually outperform buy and hold significantly. So this is one of our TBO switch bots, and you can see buy and hold down here is in the negatives. It's very, very, very bad. And then our bot made about 205% in this time frame, actually the same one, July 1st to July 1st in that year period. So it's amazing. But you can also see here in this performance, it's not up and to the right. There are peaks and it drops, peaks and drops. And sometimes there's a lot of drawdown, and it's really boring and it's really painful, but then eventually it goes up. So it's a really effective strategy to beat buy and hold. That's the whole purpose behind it. And this is actually a screenshot of one of my TBO switch bots that caught a trade. You can see the B here on 3commas for buying and selling. So this was a nice 8% trade. I didn't have to do. The bots just did it for me. So it's one of the benefits and the blessings of bot trading. So again, just to recap what we've been talking about. So we talked about the advantages of bots versus humans. Bots aren't going to sleep. They're not biased. They're not influenced by their emotions. They're going to work 24/7, 365. You can use bots to compound your profits automatically with sub-accounts. You can grow a long-term crypto portfolio with accumulation bots. And you can also hedge your portfolio with those same bots if you're still a long-term believer in a token or a protocol. You can maximize risk to reward on engaged capital. And of course, you can explore optimal bot strategies for high and low market volatility. Okay, so this is a great time if any of you have any questions about this. And do we have some sort of microphone? Fantastic.
Hello.
Hey.
Thank you for the presentation.
Yeah.
A quick question. Do you have any tips when choosing the grid bot, the right pair for the grid bot? I mean, do you go to TradingView? What do you exactly look at to choose this pair for this grid bot?
Yeah, it's a really good question. The things that I look at, I mean, I'm looking at charts all the time, and I should have included a slide, but we have a free scanner. So on bettertrader.io, we have what we call the Better Crypto Scanner, and you can look for trading pairs that have been super volatile or not very volatile. So it's similar to TradingView Scanner, except it's all about price action. So what I do is I typically look at that, and I look for trading pairs that have moved anywhere between 0 to 10% in the last 24 hours, because the point is not to find the big moon boy charts. I want to find something that's tight and it's moving. And also sometimes it can be just from hearing about a chart. Like I heard about Vulcan Forged Pyre a lot on Twitter, and if I could pull up the chart, I can't, but the chart is slowly going up, but in those slow moves up, it's making big moves in between, so it's great. So when I think about grid bots, yes, horizontal is good, but it's more like horizontal and slowly moving up, because when it exits below that grid, you're left holding the bag unless you stop it out. So,
Thank
yeah.
you. Thank you.
But take a look at PYR BTC. I mean, I'm running a bot for that one. I like it so far.
Thank
Yeah.
you.
Anyone else?
I have a question.
Yes.
I have done crypto futures before, like a while back. I did long and short trading.
Yeah.
Now the question I have, usually when you do trading, you get a liquidation price.
Yes.
In this Better Traders, when the bots, let's say I open a trade long, like for Ethereum, do I also get a liquidation price? And let's say if the price drops to the liquidation, will the bot before that already stop the trade or no?
Not if you pre-program a stop loss. So first off, if you're trading on futures, you have to use a stop loss every single time.
Yeah, that one I know.
So you can do that, but also on the platform, it tells you where your liquidation price is. They call it LP, and it's a number. If it's a long bot, it's far on this side for you, and if it's short, it'd be far on this side. But it does show you, and you can also pre-program it in, knowing how much leverage you have. You can look at free calculators like anti-liquidation calculator. I believe it's free site. And
It
you
predicts
can see,
the liquidation price.
yeah. So like if you're using 10x, 10x leverage, you want to keep your stop loss below 10%, even like 5%, because you don't want to have a 50% loss on that if it goes in either direction. So yeah, it does show you.
Thank you.
And I do use leverage on bots. Yeah. Yeah. Any other questions?
Couple of questions from my side. One is, can we custom build any existing or third-party bots on top of it in the platform?
If you're a business, I believe you can contact 3Commas and they can make a white label version of the platform, so they can give you flexibility using their back end.
Okay.
Yeah.
Okay. And how frequently would you build these bots from TBT?
Oh, that's a great question. So I am not looking to make a new bot every day. That's not the point. The point is to make a bot and to let it run and I don't touch it. So the only times where I start to make a lot of bots is when I feel like there's been too much sideways action, and when I'm talking about a DCA bot for trends, right? So when we're in a period like now is when I'm looking at making bots. Because if the market's going to make a move up, I want to be prepared. If it makes a move down, I want to be prepared.
Okay.
Yeah. So I'm not looking and making a new bot every day. The best bots that I have are ones that I just keep running for months and months and months.
Makes
Yeah.
sense. Makes
Yeah.
sense. Thanks.
So it's just about looking at the trades that they generate, and then how do I want to fix any of those losing trades? How do I want to interact or to bail them out, rescue those lost trades? Yeah.
Got it, got it. It's not exactly a question, but the backtesting aspect really sounds interesting. Thanks.
It is. It is. It's really fun to see it, especially because I've always done things by eye. So I'm looking at things thinking, well, if I do this deal start condition and I measure things out, maybe it'll do this. But yeah, having the visual of what happened in the past is so beneficial.
Because you'll always have multiple hypotheses, but you need to test before we build
Yes.
the bot. Yeah.
Yeah, yes. And also being able to, see the cool thing about it, I'm going to go back so that we just have context. Where is it? 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 Oh, here. So the benefit of this too is that you can see that this is the 10-minute time frame, and for OKX. So on 3Commas, we're talking about deal start conditions way at the beginning. Not every exchange has the same deal start condition. So if OKX for some reason through 3Commas, they don't have a deal start condition that you like and that's profitable, you know it is. You can use our back tester to generate signals from TradingView to go to 3Commas to start a bot deal. So you're using 3Commas bots as your worker bee, but your signals are coming from TradingView. Make sense?
Yeah. Last couple of questions, if there is any. So bots are always good, as you said, emotionless and other things. But how do you handle situations that are once in years, right? For example, November 2021, where it came down from 80H, right? All-time highs. So how do you define the bot to handle those kind of extreme conditions?
So the indicator that I use the trending breakout indicator, a TBO, it's all about letting you know when a trend change might happen. So part of my daily ritual is check on the bots, but then I check the charts that the bots are running on to see how strong is the trend. Does it look like a trend reversal might be changing for the upside or the downside? And then I decide, okay, maybe it's time to stop this bot and just wait and see. So that's what I do. So I use trend-based indicators to see if there's weakness or stalling in the price action, then I make those changes.
Okay. The last question, again, it's more of a platform-based. Sorry if that's not the topic, but will this platform also allow dashboards or price alerts beyond the trading?
There is a portfolio dashboard where you can see all the connected exchanges you have and track it. They don't have alerts that are generated from the 3Commas platform, though. So you'd have to use an external party to do that. Yeah. Yeah.
Thanks a lot.
Sure. Okay. I'm going to just wrap things up and then invite up Rune just to talk for a little bit. So you're all awesome. You're staying here and listening to me talk with my slightly weak and nasally voice, so I'm sorry. But if you do want to learn more about bots, and you've learned a lot today, honestly, we do have courses. That's what we do at the Better Traders. So this course, 15 Minutes to Financial Freedom, really long title. You take the course? Thanks. Oh, thank you.
I do highly recommend this course. Thank you very much.
That's awesome. Thank you so much. I did not pay him. I don't know who he is, but we'll talk later. But this is an intermediate course. It's not high level, and I start every single course at the bottom to help you understand how to connect to 3Commas. I don't skip past stuff, so this is a great course. Plus it comes with coaching, it comes with trials, it comes with free lifetime updates to the course. It's not like a monthly subscription, you just pay once. And then we have an advanced option. I'm not recommending this to everybody just because it goes deep. I start light, just like the first course, but I get really heavy in content and options and different strategies with that course. So it's quite, it's advanced. We'll say it's advanced. Okay, so please do get in touch. We are literally just down the corner right there. I'll be at the booth today. And we also have a special offer running for all of our courses. We're doing a 50-50 sale, so it's 50% off of all of our courses. And we have little postcards as well that you're all that are scattered over here. Great. So again, thank you so much for just hanging out. So Rune, would you like to come up? Could she get a microphone? Thank you. Why don't you just stand up? It's a little bit weird if you're sitting down.
Ruby.
Yeah.
Hi, everyone. My name is Rune, and I'm the host of the Better Traders podcast. I work closely with Moon and Papa on media at the Better Traders. So I suppose we could maybe start with why and when did you start bot trading?
Yeah, starting bot trading was out of necessity. Just because, I love trading. I love active trading and placing those trades, looking at charts, but there are only so many hours in the day. And at that time, I was teaching a lot in a school. So I didn't have time during the day to do stuff. So when I really started to understand what bots could accomplish for me, that was it. That was the deal done.
Right.
Done deal.
And in your presentation, you talked a lot about trading psychology and how you're really passionate about that. What are things that you do in your day-to-day to manage your trading psychology?
Yeah, so we have a free PDF copy of our journal. That was actually the thing that started the Better Traders. So in that journal, we have 5 trading rules that it's almost like a mantra. You want to read through them and understand them so that way when the market does things that you're not expecting, you're prepared. Things like understanding that you'll always be satisfied with any amount of profit. Things like you're not going to chase. Things like understanding that you're not going to go all in on any one trade. These things really helped me out initially to the point now where they're hardwired. I don't have to think about it anymore. It's just there.
So trading is obviously trading other people's emotions, right? So
Yeah.
why is it important to take emotion out of trading?
Yeah, it's. I think everybody listening can commiserate with that question, right? Trading based on emotions, based out of FOMO, feeling like, oh, this is going to be the next Shiba Inu coin or whatever. This is going to be the next moonshot. You just make terrible decisions when you enter any single one trade based off of what your gut is telling you. It's always better to look at what happened and go, oh, well, let me just back that up and see what happened before that move, and then you can look for the next one. I made a video, and it was kind of my theme for this year. There will always be another. There will always be another chart that moves up. There will always be another chart that drops all of a sudden. That's the beauty of crypto. There's so many options. We looked at OKX. There's 626 trading pairs. There will always be another chart. So you can learn from what happened on these big movers and try to identify that in other charts.
And what's the best way to mitigate risk when it comes to bot trading?
The best way to mitigate risk when it comes to bot trading would be to start small. There's no need to go crazy big. Again, that 30% rule is really important. You don't want to overextend your portfolio. You want to make sure that you leave funds on the side so that you're not in a very vulnerable and emotionally triggering place as a trader. That's a bad place. That's what the bots are there to do. Yeah.
And personally, what do you find easier to trade in, a volatile market or like a consolidation period?
It depends on the bots, but lately I've been really enjoying this period because when Bitcoin's going sideways, alts tend to pop a lot. So it makes for some great opportunities for grid bots, great opportunities for DCA bots. Yeah, so, but at the same time, the trends are really what seals the deal. So if I have to pick one, I would say a trending market, whether it's bull or bear. Yeah.
And in terms of the indicators, what are your favorite indicators that we offer?
Yeah, so the TBO, lots of TB stuff, sorry, but the trending breakout indicator is fantastic. We have a free volume indicator that I'm using all the time to convert volume automatically, so that way I know how much I could put into a bot, things like that. Yeah.
And to give the audience kind of an idea of what kind of profits you can make from bot trading, what was your biggest profit that you've made thus far?
Yeah, so the biggest profit that I made from any single bot trade was half a Bitcoin. And I don't have a mega account, so it was like a $25,000 trade at the time. It was epic for me.
And how
But
long
that-
did that take to close?
Yeah, it took about 3 months. I had to wait a long time, and actually I closed that out prematurely. It could have made at least 0.7 BTC when I checked the chart later. So again, my emotions got the better of me, and I interrupted the trade. I didn't follow my trading plan, which is frustrating. But I've also learned, you know what? I'm okay with 0.5 BTC in this trade. I think that's a pretty good trade. So it's this funny balance of being excited and being, spending that time to be present and go, wow, this is amazing. I did it. This is amazing. And when the price goes up further, don't kick yourself. Don't get frustrated. That's the worst thing you can do because it steals that joy. It steals that sense of accomplishment from what you have done. Yeah.
And what do you find easier to trade in, a bear or bull market?
Bull. It's a lot easier to trade in a bull market because almost everything goes up. So yeah, it makes it just. I'll just say this: we're not in a bull market yet. You'll know we're in a bull market when whatever you buy, it goes up 5 or 10% over the next 3 days. And when you see everything doing that, that's a big sign that things are just going to start to bubble up like a volcano. When that happens, you have to change your strategy though too. So just know, but those times are really fun. And when that happens, and you start looking at your portfolio and you're smiling and like, oh, this is another good day. Rein it in. Just take a little bit of profit off the table. I cannot tell you how many times I've had the rug pulled out from under me and I had great profits, but I didn't take any of them. It's only profit until you sell.
And when is the best time to learn how to trade?
The best time to learn how to trade is between the hours of now and forever. So honestly, you could learn to trade at any age. We have people all ages taking our courses, except not below 16, and people from all over the world. My mom actually took the courses, mostly because she wanted to support her son, but she's not a trader. She's not financially super savvy, but she's learned about it, and now I'm helping her with stuff, and it's exciting to see her learn how to bot trade and understand how it works. Yeah.
And why is education so important when beginning out your trading journey?
Yeah, education it's what I've been doing for the last 13 years, but in a school context, K through 12. So education is important because it gives people power. It gives people knowledge. I don't like being a gatekeeper in that it's all my knowledge. Like, of course, you're spending money to get the courses, but that's because I've spent years and tens of thousands of dollars of my own money figuring this stuff out. So education is important, but it's not just education. Borrowed experience is the best teacher. It's not like I don't want anybody here to get liquidated. I'm sure it's happened to some of you. I don't want any of you to be in a losing trade and you panic sell at the bottom. It's happened to me many times. That's not the best teacher. Borrowed experience. My experience over the last 3 years, actually, 3 years with bots, but really since 2015 and trading in total, borrowed experience is a far better teacher. Yep.
Maybe you could walk us through the courses that the Better Traders offers and who they're for in terms of trading levels.
Yeah. So, the courses that I was talking about before, the 15 Minutes to Financial Freedom, is a great entry-level course, and in my opinion, it's actually very, very, very affordable. It's on sale this week for 50% off at 150 US, and it comes with coaching, comes with all that stuff, and it also has active trading, so like swing trading, strategy things like that, as well as what I call A/B trading, which I love. It's trading these really volatile charts that have low volume, that are popping a whole lot. You can actually double your account real fast. I had an A/B trading challenge on YouTube where my challenge was to grow $100 into $1,000 in a month, but it didn't go to 1,000, only went to 800 in about 3 months. But this is me working, spending time with my family, sleeping, so I wasn't really working hard at this, but it's still 8x my account. So,
And what are your top trading pairs today? What are you trading today?
My top trading pairs today, I really like what I call my DeFi pairs, so like Link, KNC, ZEC, ZRX, Litecoin, even though it's not a DeFi token, but basically charts that have a lot of volatility right now. Those are my bread and butter. Those are the ones that I love.
That's it.
Yeah.
Okay, well, that's all the questions I have. Does anyone else have any more questions for Moon and Papa? Yeah? Oh, the other course? Oh, sorry.
Moonin just talked about the 15 minutes. I took this one. What about the other courses? I was
yeah.
waiting to hear the rest of the courses.
Yeah. So would it be okay to switch to the slides again in the booth? Thank you. So this course is the advanced bot trading course. The reason I skipped by this one is because it's advanced. It's a little bit heavy later on. It starts soft, but I do spend intentional time to show you how I do things and how you can really manage your portfolio and, like it says, master passive income. It's going to take time to get this down, but it's very exciting to see it actually come to fruition. So this course is really heavy on bot trading, really heavy on grid bots, really heavy on DCA bots, but how do you really get this to be hands-off as much as possible? So please understand that it's not like you buy the course and all of a sudden it's done. But I show you how it took me years to get this done, and I just pack it all into this course so that way you can just take the shortcut to do this stuff. And we also have an advanced active trading course called the Smarter Trader, and that one goes into like technical analysis, Fibonacci lines, trend lines, volume, price action, things that feel so elementary but are so powerful that a lot of people skip them. They think this is such a basic course. I already know this. It's like, no, you don't get it. Like it's okay though. And people, when they take this course and they take the bot trading course, they're amazed because it's like all the stuff in the Smarter Trader totally complements the bot course. And vice versa, people that take the advanced bot course, when they take the Smarter Trader, they go, oh, that's why you're choosing that chart. That's how technical analysis helps me to find better charts and helps me understand when to start my bots, when to stop them, things like that. Yeah,
Thank you.
that was a really good question. Can she throw you a T-shirt just to say thanks?
Thank you.
And this
Very
gentleman
kind of
too
you.
in
Thank you very
the
much.
pink shirt.
Thank you.
I have another question.
Yeah.
How long does it take for you to manage your trades a day?
Yeah, so I'm at the point now where I only spend, well, if I even look, no more than like 5 minutes. I don't look at my phone, I don't look at CoinMarketCap, I don't look at CoinGecko, I don't look at the news, because the bots are just running. So the goal for what I do and what I teach is for you to restrict your time, because you have a lot of other stuff going. It should really only take you no more than 15 minutes a day to manage your bots, to manage your portfolio. It doesn't take 3 hours a day. You can invest that time if you want to, but you really don't have to, especially as a bot trader. That's a huge benefit. Yeah.
Fantastic.
Cool.
Yeah. By the way, Moon and Papa is my teacher as well, and he's been teaching me for the last 8 months, and I've noticed a huge difference in my trading. It's been a lot of fun.
Yeah, it's been
Yeah.
fun teaching.
Yeah, we started this segment called the Tiny Trader segment, where we started with, I think it was like $100, and we're on the road to growing it to 1,000. So imagine what you can do with 10,000 to 100,000. So yeah, it really does come down to percentages at the end of the day, but
Yeah.
anything's possible.
Yeah,
Yeah.
absolutely, yes.
Yeah.
Great. Cool. Thanks for coming up.
Thank
and
you so
thank you all
much.
for sitting and listening to me today. I really appreciate your time. And again, if you have questions and you want to talk, we're just down the aisle right there. Okay? Thanks, everybody. Stay awesome and stay in the green.